Hello everyone. So we have here a very good and valid question which I think really important to be answered in a video rather than in the comments. Chemistry BMOR here has asked me, concerning your gold scalping rules, I'm having trouble understanding what do you mean by we enter only the first attempt of a support or a resistance. The second part of the question is, why should we avoid London opening market hours? Is it only the early hours or the entire London market session? Just to answer the second part of the question, it's only the early hours of the market opening, mainly the first hour of London session. And of course, I will answer the second part of the video later, but now let's concern on the first part, which is really important, and I believe many followers here may be having troubles to understand this part of the question. So, thank you, Chemistry BMOR, for the question. It's really valid and good one, and I think it's important to explain it here on my channel. And actually, guys, I can talk about support and resistance for many days without getting tired of it. Anyway, let me just tell you guys about support and resistance. To make things clear, I will jump to the monthly chart. I want to explain to you guys everything about support and resistance in a brief and how to identify the first attempt. Now, this is the monthly chart as we can see. And right here we can see that the market has formed a support back in February 2000. Now, let's identify the support and resistance levels in this chart. Look at that. Right here, we have actually a strong level of a support and resistance. Let's track it. So right here, we can see that back in October 2006, the market respected the same level as a resistance. So meaning 0.97270 was actually a very strong level as a resistance back in 2006. Now later on, in June 2009, the market respected the same level now as a support. So meaning the broken level of a resistance has now become as a support. Right? Alright, good. Let's continue. So we do have right here also another attempt of the support back in 2010 and another attempt of the support back in 2012. So meaning over the last 6 years, the market kept respecting the same level as the support and the resistance. Now again, June 2013, the market respected the same level as the resistance. Now, the broken level has already become a new resistance. Now, let's track it. So in general, we're having a resistance has been respected in 2006, and the same level of a resistance has also been respected back in 2013 or 12 as a resistance as well. So meaning the market respected the same level as a resistance, not as a support. That's really interesting. Now, let me just tell you something, guys. If we're talking about the first or second attempts, where is the first attempt of this resistance? Is it right here or is it this one? To short the answer, both of them are first attempt. What? How? Well, let me just make it more clear for you. Let's just go to another resistance. Let's take a look at that level of a resistance right there. That's gonna actually be a better explanation. So as you can see right here, we have here attempt of a resistance back in 2003, I think, and again back in 2004, the same level of a resistance has also been respected, and again 2006 it became another support, and back in 2014 the market respected the same level as a resistance again. So meaning the resistance after 10 years has been respected. Now, what does it mean? It means that this level is very strong as the resistance. So let me just highlight it right here for you. Exactly, just right there. Now, since we're talking about which one is the first or second attempt of the resistance, let me just highlight, guys, that we are having here a first attempt of the resistance, second attempt of the resistance, third attempt of the resistance, and then multiple fake breakouts happens. Now, the count of the resistance attempts begins only after the bearish breakout happened. So now we have here resistance number 1 again. So this was right here, resistance number 1, resistance number 2, and actually after the bearish breakout happened right here, the counting begins from start, and now we are having here another attempt of a real resistance, or actually a first attempt of a resistance. So to summarize it, we can actually have here a resistance number 1. Let me just let me go to the paint. 1 second, guys. 1 second. All right. So here we can actually have a resistance level, and the market kept respecting the same level multiple times. This can be resistance 1, resistance 2, and resistance 3. we can actually have a breakout from that level, and it actually can be a respected level as a support. It became as a support, and then again the market went below that level of a previous resistance and respected the same level. Now what will gonna happen if the market rise again and respects the same level of that level of a resistance? Now the counts begin from 1. So this is right here resistance number 1, and then we can see multiple attempts. So again, resistance 2, resistance 3, and again if we see the same thing happened, we can actually start the count again, and we are having here another resistance 1. So to summarize it, resistance number 1 starts only after the bearish breakout happened. Only after we are having here a bearish breakout happen, or actually a red candle, you can start counting the attempts. Let me just now go back to the chart again, and let's now go to the smaller time frames. The reason I went to the bigger time frames, guys, is to show you that these levels are actually permanent, and once the market respects any support or a resistance, it will be respecting it forever. Even after 20 years passed, we can see that back in 2002, that level of a resistance has been respected, and finally 2020 also been respected. That's the reason I'm telling you this strategy is so powerful. Let's now go to the 15-minute time frame. I want to show you that these levels can actually be permanent, and we can have multiple attempts of a support or a resistance number 1. I need to find, actually let me go to the 1 hour time frame because it's gonna be easier. Yes, right here this is actually a good example. So let me just highlight right here that we're having here also a resistance. Good. So we have here a bearish breakout candle, and now we have right here a first attempt of the resistance. So this was right here the first attempt. Now moving in the time, we can see right here that we had now a second attempt of the resistance, and right here we have the third attempt of the resistance. Now the market has made here what we call a fake breakout, because the market has actually failed to create a new support, and the market just did not rise after breaking out from that level of a resistance and instantly went down below that level. Now look at this wick right here, this candle right here. Now this also represents a new resistance number 1, which means this is right here the first attempt of a resistance. And I'm telling you guys, it can be actually spotted every time and everywhere. Trying to find something else, we are having here also, of course, another good example that right here we had here also a previous level of a broken support, and right here we have attempt number 1 of the resistance, and the market did not create any attempt of a support and instantly broke out from that level. And now we can see the market actually here rose again, respecting the same level of a previous resistance. So right here we're having a resistance number 1, this right here resistance 2, and this right here 3, and right here 4. So the moral of the story is, look for the bearish breakout candles, guys, like this one or like this one, and start the counting of this first or second attempt right after the retest of the same level. So right here, for example, here we're having a first, second, third attempt of a resistance. Right now we have here a fake breakout. So if the market is going to continue the rise, this is right here is going to be resistance number 1 if the market has reversed. And of course, vice versa for the support. Exactly. Let me just make sure that nobody thinks that this is only for the resistance. It also works for a support. So right here we're having also attempt number 1 of the support number 2, and then we had here the fake breakout from that level. Right here we can see that after the bearish breakout, the market has actually failed to create a new resistance, and right here we can see now the support number 1, and right here support number 2. So again, support number 1, support number 2. So the idea here is, after the support, if we, for example, here is the support, support 1, support 2, support 3. If we see a breakout happen from that level and the market rose again above that level of a support, now if the market is going to be respecting the same level of the same support, this is right here going to be support number 1 again. So actually I'm answering this question here because someone actually before this question, actually last year, he told me that the first support I spotted was many years back. Then he's telling me how do you count the support number 1 if it happened many years back? And this is this question right here, I think has been answered. I think it has been cleared how to find the first and the second attempt of the support. Of course, this is very summarized. If you guys are still finding trouble to understand the first attempt of a support or a resistance, please drop your questions in the comments and I will answer them about it. I will be very happy to help and answer everyone about how to identify anything about support and resistance. So until then, guys, I hope that was informative to you, and I would like to thank you for watching.